I've got some inside info for you.
Going about it that everyone's different. The same goal, owning a home, depletion and depreciation. Great items to have conversations with your CPA about. We really just want to give the best guidance with finances, with big goals like home ownership. Taking the time to appreciate those relationships that the realtor has nurtured. Customer services, we pride ourselves on that. Cut.
Yeah. Money never sleeps. You never met a CPA quite like me.
JJ the CPA here. Hope you're doing well. Welcome to the Money Never Sleeps podcast. I am here with Angie. We work a lot with lenders as CPAs, and this is our superstar. And so I invited Angie to come on. If you didn't catch our first podcast, I want you to take a peek at the link below when you're done or at the end, because we're going to pick up a little bit on the conversation we were talking about last time. But for those that maybe weren't watching that other one, tell us, when I say you're a lender superstar, just really quick, the role that you have when somebody is buying real estate. So whether you're a realtor, borrower, CPA, or any aspect that's involved in this process, talk about how you love being a part of that process in terms of getting, hopefully, somebody to yes.
Yeah, just going about it that everyone's different. Same goal, owning a home, but I can't look at it the same way I looked at the previous loan application. Just truly finding a fulfilling way to get the client to home ownership. Mortgage is not the fun, pretty side of it, but if you're financing a home, it's a pretty important part of it.
Yeah, absolutely.
And so just once you decide that home ownership is a goal, finding a great lender that's willing to not just look at it and say hard yes, hard no. They're willing to dig a little deeper, find avenues that would work for the client.
So one of the questions that she asked me at the end of the last podcast was, how do you feel when a lender contacts you as the CPA? And I will tell you this, until I really dug in and started to try and understand what is that you need, what is your goal, what is your decision-making process. So again, I've been doing this 33 years, and it was probably not until year 15 that I was like, you know what, I probably need to figure out this process. And that's one of the reasons we love with working with you and the type of lender you are. You have all these different avenues to provide different options. But now when Angie calls me, I don't mind it, because we're typically starting at the beginning of the process. But what is very, I want to say, frustrating, and fellow tax professionals out there will know, and probably realtors, is not everybody's you. And a lot of them have their checklist. Mm-hmm. And what I find frustrating actually is that actually who I'm talking to doesn't understand what you educated me on. Meaning I'm talking to another lender, and it's because that's who the client's going with. And a lot of times I'm going to be like, maybe we need to look at some other options here. But it's really kind of defining, like, what is the income that counts? And that has changed here in the last several years. We know that there's things that we can add back. And, you know, I've had clients that have said, hey, listen, JJ, you really helped us to make sure we were getting all of our deductions. But it's kind of hurting me when we now are going to get the loan. What is it that can we do? And we are going to talk about that, because some of you right now are like, oh, JJ's going to jail. We're going to be talking about how to help a lender make sure a loan gets through. And I also know fellow tax professionals are like, well, that's not my job. I'm there to do tax returns. And I'll say, hey, listen, take a deep breath and get out of the business, because your job is to help your customer. You don't just have one role, okay? Now, for realtors, here's the other reason to get the CPA involved. If you hear that the lender is now talking with the CPA, is that I'm also sometimes a roadblock. Mm-hmm. And so if you will open up the communication lines and kind of see yourself as a connector between the lender and the CPA. Because sometimes the lender come in and talking with the CPA, it's not right timing. Whereas a realtor, because I've had this happen a few times, they'll swing by if it's, you know, March 31st, and they'll leave some donuts to say, I'm so sorry that this underwriter needs this information right now, and we appreciate you, kind of thing. So really kind of seen as a team effort, but throwing it back to you, because this is really based on what you told me. So, but what is now, when you're looking at a tax return and making a decision, two things usually get asked, right? Well, if I'm looking to buy a $100,000 house, assuming I have no debt, how much income do I need to make? And then it just leads to the second thing is, but what counts as the income?
Sure, yes, especially with self-employed. And wage earners, we use your income before any deductions. So a little more streamlined process there for sure. But yes, often with self-employed borrowers, I'll get hey, can I send you my 1099s? And I'm like, oh no, you will send me your 1099s, but that's what you were paid.
Yeah.
It's not what the federal government guidelines have set for us to be able to use.
Yeah.
And so that's where the CPA comes in, and just
Yeah.
knowing like depletion and depreciation. Great items to have conversations with your CPA about. Just my approach with how much money do I need to make to buy this amount of home is always more on the cautious side. Of course, I always want to set expectations. I'm very, very big on not over promising and under delivering.
Yeah.
Customer services, we pride ourselves on that, and we really just want to give the best guidance with
Yeah.
finances, with big goals like home ownership. So it's always just vague,
Yeah.
as long as once I get your application and the credit report matches, then you probably need to show, gosh, for $100,000 home, probably need to show $3,500 to $4,000 a month in income.
Okay.
To show with no debts.
Yeah.
To be able
Right.
to make the ratios work for
Right.
qualifications. Now, obviously, multiple factors go into it, like down payment and credit score and things like that.
Yeah.
But I always say that that's a pretty good buffer for
Right.
90 to 100,000.
Yeah. Well, one of the things that Amanda did, my wife's a realtor, is with our sons. She said, even though they're in their early 20s, you need to get with Angie and kind of look at where you're at, even though you're not looking to probably buy a house right now, but see what road you need to get on. And so getting there in advance. And, when we're talking about the self-employed and the 1099s, right? So we know a lot of realtors here, they get that 1099 and it's like, yeah, that's what you made. And then, of course, we have the deduction. So you threw it out before I could when we were at break, but you said line 31. So that's
31.
Schedule C, the bottom line. And of course, the top line is your 1099 income. And there's not anything we can do, as you know, but there's not anything we can do to change the top line. It is
Correct.
what it is. So never would we be trying to work a tax return to show less gross income.
Right.
But there are certain tax deductions that when I'm talking with the client, let's just go with depreciation. And you indicated, which I love, I'm going to be honest with you, a lot of underwriters don't even seem to know what you educated us a long time ago. But if you have a business, right, whether it's an S Corp or a C Corp or a partnership or Schedule C, Schedule E, all the different avenues, if you have depreciation, that can be an add back, which just means this: if your net income is $100,000, but you have $15,000 of depreciation, it's an add back that possibly then, for these purposes, your income can be seen as $115,000.
Yes.
So, fellow tax professionals, realtors, borrowers, we have an avenue with assets, giving a minor example, where if it's under $2,500, we could just expense it. But we don't have to. We can depreciate it over time.
Sure.
But we can depreciate it over 5 or 7 years, whatever the class life is. But we could decide to do immediate depreciation or let it be taken over time. So right there is an area where we as a tax advisor have just very easily some decisions we can make with our client is just how do we write that off, which more means what's the timing. The second is we're not required to take every single type of deduction. Now I know right now, fellow CPAs and EAs, you're like, whoa, JJ, you can't manipulate numbers and you're going to try and tell people how to get earned income credit. Angie, you can tell I've been on YouTube a long time. I already know where the people are going to be like, hey, flag here. We're not talking about manipulating income, but what we are talking about is we know that when we're evaluating expenses with clients and we say, listen, do you really want to write off all of these meals? Because you're not required to write off all of these meals.
Right.
Do you really want to write off this travel? I mean, is it really a write-off? Is it kind of, teeter-totter? Meaning, yeah, it qualifies, but, I could probably easily back it off.
Yeah, what are your goals?
Yeah, exactly. And, then it just depends on the deduction on whether or not it's quote-unquote required. I'm just going to say it. I don't think any deduction is required. If you think differently, good for you. That's not what we're talking about here. But when you now are visiting with the CPA and you're now talking about the income that counts, and if we are getting ready to file the return or finish up the year, what is it that you would want to communicate, whether it's to the borrower or the realtor or the CPA, in terms of what you know are some roadblocks in terms of you could have done it differently, besides even just the not taking every expense, if you will. So what are some of the other roadblocks that you kind of come across that probably could have been avoided if you were brought in the process earlier?
Sure. Yes. Always the deductions. Those are, while I completely understand, I've seen tons of tax returns, I've had tons of conversations, I completely understand the benefit of that. And the reasoning behind it. Of course, when you're a business owner, there are expenses that come with it. But truly, knowing your goal up front and having the conversation, if you're a self-employed borrower, if your goal is to purchase a home within the next 5 years, conversations need to be being had.
Yeah.
You can, start showing, start dwindling down those write-offs in 1 year.
Right.
Or we can
Right.
look over the next course of few. So that's always very helpful. And amending returns.
Yeah.
Those are tough.
Yeah.
Obviously can't be done during
Right,
a mortgage process.
right.
So those are some roadblocks that I see. Just
Yeah.
Sometimes just a CPA, stiff arming, just like, no, this is the way it has to be done. And
Yeah.
well, my way is the way it has to be done too.
Right,
Someone
right.
not as cool as me makes the rules. That's
Yeah.
how the government
Right.
tells me what I can and can't do
Right.
with tax returns.
Yeah.
And so I would say those are just the biggest hurdles. Amending, not having a conversation or planning early enough. I literally tell self-employed borrowers that I come in contact with, even some of my realtors, they're like, hey, we're planning on purchasing a home in the next few years. I'm like, perfect. As long as it's not today, then we can
Yeah.
set you up a great game plan.
Yeah.
So the moment home ownership comes into your mind as a business owner, bringing in your CPA and bringing in a lender that you trust, not necessarily meaning that you're starting that day, but you're really putting the right plans in place to accomplish it sooner rather than later, the most cost-effective way, versus where you're a little sad.
Yeah,
So,
no doubt. Well, with realtors, with Amanda, what is really the yay or nay on any deal? It's what is the answer that Angie can
lender
come
say?
up with? Because we know we can have a willing buyer, a willing seller, everybody's happy, we got a great price and great terms, and it's this and it's that, but you don't qualify. And so for me, the realtors that we work with and they're clients of ours, we really coach them that when you're approaching this as a team, that the sooner you can push your client in front of the lender, and if they don't have one, in getting them in front of somebody like you that has different avenues and communicating up front is huge.
Yes.
In now actually not wasting your time as a realtor,
Sure.
showing them properties and then getting all the way to there's an offer, maybe you thought it was going to happen and then it doesn't. So when a realtor is getting ready to contact you, would you rather hear from the realtor first, or do you want the realtor to have the borrower reach out to you? And based on that, what's kind of the best way for that to roll itself out?
Yeah. I think anytime the realtor can communicate with me, just conversations that the client has shared with them, just a little backstory is super helpful. We never want the client to feel like they're repeating themselves. So if there's information that's been shared, I love to talk with my realtors just anyway. I make them all be my friends.
Yes, absolutely.
And so that's always very helpful and just builds that relationship really even more. And then I really turn to the borrower from there. I love getting the client's contact information because we're all busy. We're all doing 25 things.
Right.
And it's my job to make it a priority to contact you. So if, the realtor tells me they're going to call you today and they don't, I want to make sure that they get the information that they were looking for because a kiddo came home sick from school or a headache came on or, just little things. They know that they're top of mind with us.
Yeah.
So that's a huge priority to me. And then having the conversation. I'm a weirdo who does still like phone calls. I love text messages
Me
and
too.
emails for
Yeah.
sure.
Yeah.
I get a lot more done in a day
Right.
that way. But some scenarios are not A to Z. You've got to talk the here's and there's. So
Yeah.
I love being contacted by both of them.
Yeah.
The more information I can gather really just opens up my toolkit
Yeah.
where I can go here and go there for sure.
Yeah. Well, one of the amazing things about you is I've been at the restaurant with my wife. She gets a call from somebody, and the first thing she's doing is trying to figure out what they could qualify for to then know their budget. And in this exact scenario, we're having some Mexican food. It's probably Thursday night at 6:30. She calls you. You're wonderful enough to pick up the phone, and immediately Amanda is telling you some information. You're also asking a lot of questions, and you were getting that process right off and running. And all I'm saying related to that is that that really showed that client who hadn't even met Amanda before. Wow, what a team player here.
Yeah.
This realtor has already reached out to a lender, is already connecting me. And so it's a real service. And then the sooner you're getting them connected, because then the next day you followed up with Amanda and you were like, hey, here's where we're at on this. Here's our thoughts on this. And that helped Amanda guide that buyer into really what is a great fit. And it just kind of went together like this. So we are going to have you on a number of podcasts because you are awesome. One of the things that I love about being where we are in America is that we all are a team around here. I'm just going to say it in Edmond, America. So we have got a number of other team members that we're going to be bringing on to visit about a number of these issues. But with that, thank you so much for being on with us today.
Thank you for having me. It was so great.
You bet. All right, with that, thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a lender quite like Angie, and you've never met a CPA quite like me. You have a great one.